Hello traders, Nick Shaheen here, chart nerd. You know what chart nerds do? They replay the action, especially as funny as Friday afternoon. Oh my goodness. Okay, so quadruple witching. CNBC, the media has been touting it as the end of the world, making it more interesting. They told us Tesla. Going into the S&P, you say $600 billion market cap, I think thereabouts it was. And apparently it's a big deal. To me, I don't know if it is because 20% of it is controlled by Elon and he's not doing anything with it. So, all right, so let's see how it unfolded. I'm using TradingView and it has a cool feature, not very useful other than for entertainment purposes, and it goes back in time and it goes tick by tick. So let's see. I went back. I have the S&P, the spider, the ETF is down below. In white is Tesla, the white line, and Tesla axis for prices is on here. So somewhere around $670 or so at one point. I'm going to hit play, and it's going to go 1 minute at a time to a certain speed. And this is the S&P price axis right here. So try to keep up with it. I'll try to speak to it, but basically the day was going okay, and then whoop, trapdoor opens, only to smack dab the shorts right in the face. Like I don't think I've ever seen anything like it. So let's see. So the day was going okay, and then pothole opens up under the market. It was orderly in the chat room. I said, don't fall for it, don't bite, don't bite. And then sure enough, we found footing and we ripped. And just before we ripped, I said, I'm going to take some calls in the SPX for the end of December and early January. And those calls were profitable almost immediately. It's not like I saw it coming. I knew that it was a fake out. So watch this. And boom, hatch opens. So the prior low in Tesla was like 650 right here. And then the hatch opens again, goes down to like 630 something, past the old low. So now we're at 640 something, and boom, little lower it goes in the 30s now. Tesla, look at it, bottomless pit, right? It looked like it was the end of the world, and then, whoop, back to the highs, and it closed after hours at 695. It didn't close at 695, but it hit 695 like 3 or 4 times. NEO hit 48 at the same time. Like, so what, is Neil joining the S&P again? Also? So this was a pretty funny day. Hopefully, it's probably not funny for the people that lost money, if anybody lost money in there. But the point is, if you know charts, you probably are not going to fall for a lot of fake outs. So what caused me to say stay? Because all day I was watching the VXX. So this is an ETN, basically tracks the futures of the VIX. It's a lot more useful inside the day than the VIX. The VIX lies all the time intraday. This one does not. It's almost like watching the VIX futures. So all day the pivot was around 17.3. So that was my gauge. When they ripped, they were trying to keep it, then they got above it, they couldn't hold it, they fell below it, they then back above it, and then they teetered below it, but they couldn't break from the range. And I looked at the prior prices, I saw clusters, so I knew the VIX wasn't going anywhere. Plus I saw the battle between the small caps and the VXX, not the VIX, and the small caps were still holding relative strength, and then the small caps opened the trapdoor. But the second thing I was watching, 2 other things, the dollar and Twilio. So it was like a combination of 4 different tickers watching how they played against each other. And as long as they were strength in Twilio or strength in the small caps or weakness or no strength that goes with the VXX in the dollar or bonds, I wasn't too worried. So I said, don't fall for it, don't bite. Literally, I said, don't bite in the chat room on the dip. Like, don't bail, don't buy puts, don't close your calls. And then at the lows, I said, you know what? I'm going to go over the weekend long. I'm going to buy some calls in the SPX or call spreads. And sure enough, like 30 seconds later, the bounce happened. Charts matter. I don't care what you think. If you're a super fundamental person, I don't discount the need to know the fundamentals. This is how it's done. But if you're not looking at charts as well, you're definitely missing a tool in the toolbox, and your opponent has it. You're thinking, I'm not competing against anybody. Of course you are, because every time you buy something or you sell something, you're buying it from someone, not off the shelf, and you're not putting it back on the shelf when you sell it. The other person on the other end of your trade thinks you're an idiot for doing what you're doing, as you think they're an idiot for doing what they're doing. Like, why would anybody sell you the stock you're trying to buy unless they think it's not good? So, two sides to every coin, and don't discount the other side. And if the other side is using more tools, chances are they have an edge over you. So even if you don't know charts, first of all, they're easy to learn, the basics, and that's all you need. Get somebody who can help you out. The easiest thing to do is to plan your day. So this goes out every day to everybody on my team, and we know, like I knew that this was the line to beat today, and that didn't happen for the S&P. You can't see it here, but well, the Nasdaq has been itching to go for a while, and it still is. It hiccuped a little bit, but it confirmed the base that it had set. So I'm not concerned about it yet. Plenty of support below. Plenty of support below. The Dow is kind of like also looking to pop. Like they failed and failed, but now so many times they're coming up against the same neckline. Higher lows. How many times is that neckline going to hold? We will need a black swan event to crush this. I'm not saying we should go to the moon. I'm not that guy, trust me. But I'm saying there are no bears. And when selling happens, it's because winners are booking something and they immediately roll into something else. That's not behavior of somebody scared. Look at the small caps. They were trash up until like a couple months ago. They hadn't made an all-time high since 2018, and suddenly they cannot be stopped. They cannot be stopped. So every time I draw an arrow, they beat it. They meet it and beat it. So this arrow gone. Monday I'm going to have to put something else. I finally gave up and I said, open air. Where did I do that? Somewhere here. I said, open air. What am I going to do? I mean, you draw a line and they're gone. This is the weekly look on the SPY. Broke out. Itching to break out. That's the QQQ. Itching to break out more. That's the Dow. The tricky part with the Dow is that it's heavily weighted toward a few stocks. It's a price-weighted average. So if the sticker of the stock, like the Boeing, for example, is $220, if it moves 2%, it's different than a $50 stock move 2%, even if the $50 has a bigger market cap. Doesn't matter. It's price-weighted. If your stock price ticker is high, not the value of it, you affect the whole index more, and it's only 30 companies in there, so I don't know if it's easy for it to get whipsawed is what I'm trying to say. Boy, that was tough. All right, next signing out.